Hi, and welcome to this week's episode of the Cost of Carry podcast. My name is James Chi. Let's get started. Continuing on this month's theme of past examples, hypotheticals, and adaptations, I thought I'd give some more examples of, again, some of my clients' success stories whereby some of the details have been omitted and changed in order to apply a more general and conceptual understanding of what happened. So this week there will be two scenarios, and we'll start off with scenario 1, which is purchasing yellow goods for commercial use. Keep Digging Pty Ltd is a small excavation business that does contracting work on various construction sites around Sydney. The business has been growing steadily for the last 18 months, and the two directors want to get 6 more vehicles, bobcats, skid steers, small excavators, in order to meet the requests that they have received for their equipment. They know that they can go straight to the dealer and finance the machine, but they don't always want to buy new, and they don't also have clean credit. So in order to combat these difficulties, they approach their broker at Ding Financial, who has previously organized their digger and their commercial warehouse. Due to the broker's understanding of Keep Digging, he is familiar with the types of products and lenders that he can accommodate to for the directors and their business. The broker spends a week sourcing the right solutions and sends the results to the two directors to decide between a master lease, chattel mortgage, and individual asset finance. In terms of the cash flow, the directors are pleased that there are no balloon payments on any of the options and don't mind paying a slightly higher interest rate because they will try and negotiate the purchase price down. The directors find the range of equipment they are looking for and instruct the broker to commence with the application. The lender that will be providing Keep Digging with the finance is familiar with their assets and their business and are able to release the funds within 2 weeks, which aligns with their delivery schedule. Again, a highly summarized scenario, but let's review the pros and cons. Pros. The pros include the options were available to suit what was needed, and speed. And as was evident in the scenario, a 2-week delivery schedule is pretty tight, but once again, if the option is available and so is the lender that understands what is being sought, then this obviously adds a lot of cohesion for the broker in lining up pieces of paperwork to get sorted out and actioned. Now, the one downside to this solution, and it wasn't so much the solution but rather the profile of the borrower, was that the price reflected their credit profile, and so this is common for many types of lending situations, but if your credit report or credit file or credit history isn't as strong as perhaps some lenders would like it to be, then of course the types of interest rates and products that are available become somewhat limited and also slightly more expensive than a clear credit file or a strong credit file. So in summary, asset finance is an interesting area because in most cases the borrower is looking to finance the full purchase price, and it is more important to shop around to make sure that the pricing can accommodate the business and cash flow schedule. And this is opposed to, say, commercial lending or commercial mortgages, where it is tied according to an LVR. For Keep Digging, and for any business that buys machinery and motor vehicles, making sure that the finance comes in before or at delivery is essential, because the worst thing that can happen if it's done at an auction or through a private dealer is that the purchase or invoice can become void, or that a penalty is charged to the buyer. And not to mention that obviously in this machinery space there are a lot of businesses conducted on relationships. So in order to make sure that your relationship and your contacts in the industry remain strong, it's always important to remain vigilant of dates. So if the broker is familiar with the business and has previous experience with them, then this is helpful in preparing that information and getting it before, in front of the most appropriate lender to get the facility approved, or perhaps the most appropriate loan officer, or from the financiers, from the finance side of things. Once the credit profile, and also once their credit profile improves and report is not only established with a handful of lenders, but it's also demonstrated to be successful as well, well, this will also help them getting better pricing and also better turnaround and service from some of the lenders, and that can definitely assist in any types of businesses expansion. Scenario 2. Financing a recreational fishing boat. Abraham is a middle-aged man who is looking to purchase a recreational fishing boat to enjoy in the weekends. He recently attended a boat and fishing expo, and after seeing the prices that some brands were charging, he believes that he should go and buy a sturdy second-hand boat instead. Abraham intends to borrow for the full amount of the purchase of the boat, and he approaches his broker at Ding Financial, which is the same one who assisted him on his home loan, to inquire about the options that are available to him. Abraham provides the broker with all the details and research he did on the types of vessels that he is interested in purchasing, and also that he is looking to purchase the boat in about 8 weeks. 1 week after the meeting with the broker, after meeting Abraham and 1 week after the meeting between Abraham and the broker reports to Abraham about the lenders that are available and explains the features of each product available. Abraham is aware of only one of the lenders and decides to go with them. The broker proceeds to submit the application, and after some inspections and valuations, the lender is able to release the funds for the purchase within 3 weeks of the application being submitted. Again, let's look at the pros and cons. The two pros are speed and a facility that is a specialized lend. Now, speed obviously comes in the form of 3 weeks. Now, that may not sound quick, but if this is something that you want to enjoy, and you also have a deadline of 8 weeks, then 3 weeks definitely comes well under that expectation of time. And secondly, second-hand recreational fishing boats aren't always the most preferred type of security. Now, in this case, we were able to find a lender who was able to accommodate for this. And it's similar to, say, perhaps any other type of specialized motor vehicle, like a car or a luxury car, or perhaps it's a piece of machinery. Because it's more specialized, there can be a lot more complexity involved in regards to valuations and risk, but fortunately in this case a second-hand fishing boat wasn't deemed as risky as some of the other models that were on the market as well. The two downsides to this deal it needed to have the model and vehicle lined up or identified, second-hand models can be more difficult for some lenders to accept because we're entering into the resale market. And obviously, if you have a brand new boat, the price is determined by the price tag or the tax invoice. But if we're dealing in second hand and we're dealing, perhaps it's private, well then we're also considering stuff such as, is it at arm's length? Is the price that it's been sold for fair? Things like that. So there's a few things to consider that can hold it up, but definitely if you do your research and you're prepared and you understand what you're trying to do, well, these perceived cons can definitely become, definite upsides if you, like I said, you're prepared and you're aware of what's going on. So in summary, the options that the broker provided, and I didn't mention this in the scenario, but they included a cash out against the home, given that there was equity there. There was also a personal loan option and also a motor vehicle finance option, which was that asset secured, or the boat being the asset which was secured against which was being used to secure the loan. So speed is slightly dependent on which you're going to take. That is, a home loan can take longer than perhaps an asset or a personal lend in most cases. And on top of that, the product or facility can be tailored to what Abraham wants as well. So depending on your credit profile or how much you're looking to borrow, this will definitely determine how the product is priced. Fortunately, in Abraham's case, he knew exactly what he wanted after doing his research. And while he wanted a second-hand model, and this was again noted as a perceived downside to this type of situation, the finance was made available because the broker was able to make the lender understand and aware and also comfortable with what the purpose of the credit was for. So in going for a weekend fish with your mates or to enjoy a cruise on the water, something like this isn't too much of a stretch of the imagination. It's definitely a achievable goal if this is what some people wish to do. And that concludes this episode of the Cost of Carry podcast. Thank you all for tuning in, and I'll see you in the next episode.